RMG.
Hey there, everybody. Gordon McCallum from First Foundation Mortgages for this week's Canadian Mortgage Hangout, which you can watch live at CanadianMortgageHangout.tv. But if you're watching me right now, you probably knew that already. Joined by Jackson Milton, the pride of Regina, Saskatchewan, the Queen City. Say hi, Jackson.
Hey, guys.
And Rob Campbell from Guelph, Ontario, representing the East, or I guess the center. What do you guys call yourselves out there? You're not East out there, are you?
I believe on the way into Guelph, the sign says close to the center of the University of Toronto, Guelph, Ontario, Canada.
Okay. And Scott on the West Coast. Give us a W. How do you do that?
Do we have something like that? I don't know. Morning, guys.
I can't do it. What's up on the West Coast? So yeah. Scott from Verico Paragon Pacific Mortgages. Nice to see you gentlemen again. I'm sorry I missed last week. How was your time?
It was good. It was a good chat.
Yeah.
You missed out.
Good. Well, I'm excited to be back. So this week we're going to chat a little bit about everybody's favorite topic, prepayment privileges. Unless that's not your favorite topic, but I picked it, so forget it. You guys, what's the deal with prepayment privileges? How come everybody says they want these things and then nobody uses them? What's up with that?
That's we're all silent. It's true. We sell them, right? But how many people actually take advantage of them? Very few. Very few. Most of my.
Do you know the latest stat on that? I forget. I haven't seen a statistic lately on that, but it was, below 20%.
It's below 20% for sure.
Yeah, it's surprisingly low. It is. I think people get maybe they get a bit apprehensive about taking advantage of those privileges. Maybe they just don't know how to go about it. Maybe it's not explained properly. I think generally people like to know that they have options to pay down the principal, but they're really not maybe fully aware of the potential that it can have towards the bottom line.
So what can we do to teach people? Is it a lack of information that brokers are providing, or is it the clients don't care enough? Is it a combination? What do you think?
Jackson, go.
Whoa, sorry, I wasn't listening. You guys go.
Okay, I'll go. I don't think it's educational. I think people get it when you explain it. I mean, I think, like I said before, it may be a little bit apprehension to kind of get the ball rolling. But I think quickly that I think people get wrapped up in life. I think we're all busy with life, how life has evolved, and especially over the past 10 years, and the way the economy has been. But I think people just forget about it. It's like that old infomercial: set it and forget it, and they forget the mortgage, and they make their payments every month, and they're okay with that because they know what it's going to be. But I think if we can really show them by number, just the basic numbers, those options, I think it's advantageous for them to do it. I mean, especially with FirstNat has 20/20 and a double payment. So there's three options all combined with each other. You can drastically reduce the balance over 10 to 20 years and be mortgage free.
Is anybody out west thinking that Rob's getting a better deal than we are on FirstNat's prepayment?
I thought it was 15. I was going to say, because I thought they were at 15/15, but yeah, it's probably an Ontario thing. They just get more perks than we do.
Maybe. For the record, it's a rock star thing.
Oh, wow.
Rob the Rockstar Campbell.
No. 20 or 15. I mean, regardless, right? Like, let's be honest. How many of the average consumer, or the people watching out there, would put 20% of their principal balance down per year? So you know what? An extra 5% to go down to 15. It doesn't really matter. What matters is every last penny that they can put towards their mortgage, that they do that, and that's all it really comes down to.
Okay, so I'm curious, straw poll, guys, and we can start Jackson, and we'll go right through the list. At least my left to right is I've got Jackson, Rob, and Scott. Guys, what's your favorite? Tell me who your favorite lender is for prepayment privileges and why. Go.
I would say that I like I like Street Capital. I like First National. The 2020 is good. They're super easy. You've got online banking. It's very easy to set it up. Their systems look very, very similar, both Street Capital and First National. Maybe it's the same company, maybe it's not, but very similar on the client user experience. At First National, the 15-15 double up is fantastic. So those are the two that I would use.
Okay, Rob, go. You like First National?
I'd say First National, and even I just saw B2B, which is formerly Laurentian Banks, coming out with modifications to their online system so that it's a little more transparent as far as what you owe, what you can do. So, you know what? But at the end of the day, any lender that's going to provide 15 to 20, 25% prepayment plus double up options, and not scaling, and maybe the ability to also scale back once you top up that monthly amount. Some lenders you're not allowed to do that. So it really depends. But I say anybody that's willing to do 15 or 20% is great.
Yeah. And Scott, have you got a favorite?
Yeah, I'm alone here. I like ING. 25 and 25. It's obviously it's a big lump sums. I mean, a lot of people take advantage of that lump sum portion. If it fits within a client's range for increasing their monthly payments, 25% works quite well. Yeah. If clients are wanting to put in more, then I would go somewhere like the like the First Nationals, where you can put in double a monthly payment.
Yeah, if you do the math, go ahead.
No, one of the big reasons I like ING's prepayment privileges is if you ever have to break your mortgage and refinance either with them, they'll take into account the full prepayment, right?
Yeah.
So it's kind of nice to have that if you're if you maybe anticipating needing to break it or something like that.
That's a good point, and actually that's something that I know there are a couple lenders doing that, but that's something that if you have a good lawyer, this is maybe a tip for other mortgage brokers watching today. One of the things you can ask a lawyer to do is do essentially a two-stage payout. So they'll advance funds to cover the prepayment privilege lump sum amount initially, and then follow that up as soon as that's done with the actual discharge, and that can save the client 20% of their penalty. Which I think as a professional we should make sure we do that. I'm just getting some reader feedback about this. Conrad De Jong on Twitter is asking if Rob Campbell is in jail right now. So
he's wearing an orange shirt and he's got a concrete wall behind him, and it's very echoey.
Maybe that
apparently Rob Campbell is in jail.
Are those your legs rattling in the background?
I've opted, being 2012, I've opted to give up my last phone call for my last webinar. So yes, I am broadcasting live from a penitentiary somewhere in the wonderful Has-Been, Ontario. Thank you.
Wonderful. Well, thanks to Conrad for that question. Conrad's following us from White Rock, BC, and shout out to Conrad. Maybe we'll have you on the show one day. So guys, prepayment privileges, back to that. Why do you suppose some lenders, the banks we see at the retail level, you typically still offering 10 and 10 in a lot of cases, and only when asked or pushed, kind of increasing those amounts. If people aren't using them, what are they afraid of? Is it just something that they can, throw in to help the client feel better about closing a deal? Is it a deal closer for some lenders? They hold off until they need to, or?
Well, I think what they're playing on is people's best intentions, right? Everyone has the best intention of paying their mortgage off as quickly as possible. However, I mean, realistically, if you're going for a mortgage, because it's better than renting, and you've got some consumer debt, you got car payment, you got a line of credit, you've got a credit card balance. I mean, really, you're paying what, 3.09% on a 5-year fixed right now? Now, I understand that the first 5 years is pretty much all interest, and putting money towards the principal makes sense. But for me, if I'm carrying $5,000 credit card debt, I'm going to be paying off my credit card before I'm going to be putting any money down on my mortgage. Yeah. And I just think that our society, we're pretty, well, the recent rule changes is trying to curb spending. I'm looking at it like people are overspending because money's really cheap right now. To me, I'm just going to guess that the last place people are going to put their money on is their mortgage, probably because it's the cheapest debt they've got.
Yeah, I guess you're right. If household debt overall is a challenge, this is going to be the last thing to do. I find it kind of ironic. I don't know what you guys think about this, but I find it kind of ironic that prepayment privileges are probably the most useful tool for the two types of clients lenders don't like the most: business for self and commission employees, because they're the ones who can make it fast and make it in big chunks. And have that cash available sometimes if they have a big month or whatever to put an extra lump sum down. And yet they're the hardest to finance these days. So I wonder if that has anything to do with it.
I think, you know what, just saw a comment from Conrad on Twitter here, just basically saying prepayment, most people just don't have the money, and I think Jackson kind of touched on that. I think we're right. I think we live in a time where times are maybe a little tougher than people realize, and you know, people sit back and go, you know, this money's better allocated for the short term rather than the long term to put it down on the mortgage. It's all mindset. It depends on if you view that as I feel most people really should view the mortgage as the bigger debt because of the size of it than the month-to-month revolving stuff. But having said that, you know, you got to eat and you got to provide for your family. So getting rid of that month-to-month debt is crucial for some people.
That's a good point. Hey, Scott, are you do you ever have clients? Are you doing many readvanceable mortgages where there's a fixed component and a readvanceable component?
Very few. For the most part, they're all fully amortized and not set up like that. I don't do a lot of HELOC business either.
No. The reason I ask is I just think that I'm wondering if these changes to the HELOC rules will actually make prepayment privileges less attractive. Or prepayments less attractive to people, because to Conrad's point, if you don't have a lot of money but you have some kicking around and you think maybe I'll make a prepayment, a lump sum prepayment, if I happen to accidentally overpay or it turns around in a month or two and I need that money, I can't get that out unless I've got a readvanceable product. So to me, a readvanceable gives people the ability to make really, really aggressive prepayments, whether on a monthly basis or on a lump sum basis, without a whole lot of risk, because if they need to, they can still access that capital. A straight amortized mortgage, they kind of have to live with that earlier decision. So.
Yeah, I mean, with that, it's important to look at the type of client as well, right? I mean, we're kind of talking similar with Jackson, like, you know, people have a lot of debt. The readvanceable or a HELOC, something like that, isn't the right product for somebody, you know, for a lot of people. And we, you know, I see it a lot if you're doing a refi for somebody. How many times are we refinancing someone's line of credit that's maxed out and they've just been paying interest only, you know, and they're not getting ahead. So I don't know. Talking with these changes, you know, it's a big change, but it's for some people it's gonna help.
Good.
Now, on a just to add to that, we're talking about maybe changing the rules for those HELOCs to go down to 65. Rob McLister had a great post, I believe it was yesterday, about how credit unions might be exempt from that. At least I believe it was in Ontario, but I could be wrong. But there could see some credit unions still being able to. And we all know how institutions are, like you said, Gord, about self-employed, stated income deals. This could be a huge advantage for brokers, but also for a client looking for more options who's in that position. And credit unions love those kind of clients, right? They love those self-employed, small community business owner. So all in all, it might be a good move for client and for consumer and for brokers as well.
Well, correct me if I'm wrong, but isn't it possible that the credit unions can do that because they're provincially regulated right now?
That's right.
Yes.
Yeah.
So now I've also just read, though, of course, that there are some moves afoot to have them federally regulated so that they'll be allowed to consolidate and cross provincial boundaries, which will actually be, I think, probably a good thing for the Canadian consumer, because you'll have some of the really strong credit unions amalgamating and then competing against the Big Five. So you'll probably see some larger scale competitors for the banks. But I don't know if that'll change their ability to go their own way on some of those regulations.
Yeah, I find that kind of change interesting, because obviously, you know, with credit unions they have their lending areas and that kind of stuff. So I'm guessing, you know, if they're going across Canada now, they'll expand that. I mean, that's I think a bonus for the members of the credit union that have mortgages. I've had more more than one occasion someone that's gone to a credit union had their mortgage at a credit union, and then for whatever reason transferred for their job or whatever, and they can't move their mortgage. So I mean, maybe this is going to be a good bonus there as well.
Right. Most of those are registered as collateral charges. That's right. Yeah.
Well, they're that, and the credit unions have their. I don't work a lot with the credit unions locally, but they have their lending areas that they won't loan out of, right?
Good point. That's right. It makes it harder to transfer across the country for sure.
Yeah.
So, good. Well, gents, I know we want to keep these things to about 15 minutes or so. Any final words before we go? Send help. Are you allowed conjugal visits over there, Rob?
You know why they call them conjugal visits?
No.
Because you get to see the conjugal.
Wow, you just said that. Thanks.
I did. You're very welcome.
Hey, this is Canadian Mortgage Industry Unplugged, you guys. We get to let our hair down a little bit, so to speak, although none of us have much to
As most of us are bald.
Most of us don't have it.
All right, well, gents, just a shout out to Scott. Thanks for putting that Canadian Mortgage Hangout.tv website together for people who can watch this live or recorded after the fact. And just a reminder, we'll be scheduling these every Thursday, 11 a.m. Mountain Standard, 1 p.m. Eastern, and 10 a.m. Pacific. So we'd love to have feedback. Thanks to Conrad for his posts on Twitter. If anybody has any suggestions on any topics they want us to cover, please leave us a note at the website. Again, that's CanadianMortgageHangout.tv, or on Twitter. Our Twitter handles are at the bottom on our bottom third there. So, signing off this week, Gordon McCallum, and nice chatting with you, gents. Take care.
Thanks, guys. Have a great rest of the week.
You guys as well.